morning, everyone, and welcome to a brand new Market Week here on Frontier Opening Bell. I am Bosun Omofaye. Let's get this week's show started. My panelist, Ali Khan Sachu, who is the CEO and founder at Rich Frontiers Management from Nairobi, Kenya. Thank you, Ali. Hope you had a great weekend.
Good to be with you.
Thank you very much. I appreciate it. And Uche Naminis is an FX trader and the managing partner at BlueFX Nigeria, sitting here in Lagos. Uche, good morning. Hope you had a nice weekend as well. Thank you, folks. Let's take a quick rundown of our African markets. Equity side, just about 5 markets we covered for you on a daily basis here on the show. You can see the Nigerian markets weekly gain 0.67%. The Ivorian market finished 0.5% up north on Friday. The Egyptian market was down nearly 1%. On Thursday, the Kenyan market less than 0.1% on Friday, and the South African GSE 0.65%. That's just a bit of a just give you some reminders. I'm sure you folks have the numbers. You already have those numbers, so we'll just try to remind you where we finished off last week. But let's go to the East African market, where the budgets for Kenya, Uganda, and the East African community was the big story last week. This morning, the budget breakdown still continues, but the story around Centum investment, his Q1 numbers and repayment of his bond, the loans was what story still making the headlines. Net profit 79% to the North, 7.4 billion shillings, declaring 1.20 shillings in dividend. Meantime, on Friday, the Kenya's central bank says its monetary policy committee meeting, earlier scheduled for June the 30th, has been revised forward by 5 days to June the 25th. Meantime, Kenya ABSA says it's restructuring loans up to 54 Kenyan shillings within this period, but as always, times and conditions apply. So in Dar es Salaam, the stock exchange, the Dar es Salaam Stock Exchange PLC, announced its full year 2019 numbers, releases financial statement for the company, which is the stock exchange, and says the 5-year strategic plan will continue in 2020 as the stock exchange in Dar es Salaam looks to float a mobile trading platform, as well as the ramp up on other technology to make that market much bigger and better. So let's get Ali to weigh in on this very quickly on the Kenyan market, Centum, and the budget. What's the big story around Centum Investment? Really, how big is this company making big splash?
So Centum Investment is about market capitalization of about $170 million. But it's very visible in our economy because they put up the iconic Two Rivers Mall, which is our biggest shopping mall here in Nairobi. They had a very big investment in a coal plant where they've actually had to take an impairment of about $39 million because the likes of the AFDB have pivoted away from coal, and they were unable to get guarantees from AFDB to support that plant. So it's a very visible company. It's pivoted in a big way to real estate. If you look at the portfolio, 55% is now all about real estate. And there was a lot of conversation around these results because the headline number was optically quite startling in a very tough environment, plus 79%. But then when people drilled into comprehensive income, they actually reported a loss. So I think that that dichotomy was what caught people's attention. They've paid down a lot of debt. They've deleveraged the balance sheet in a big way. They sold out of a bottling investments they've made very profitably. But the concern here, I think, is around the real estate portfolio. Two Rivers is let 80%, but the commercial building next door is only let 20%. So overall, it's a mixed bag. half of the share price of 25 shillings is actually in cash and cash equivalents. And the question is, what do you value the rest of it, the real estate, a small banking stake in a tier 3 bank, and a bunch of other investments? So that's why it caught everybody's attention. I think reverting to the budgets, of course, we had that on Friday. The overall view there is we've kicked the can down the road. I mean, here in Kenya, borrowing is at $8 billion. The expectation is we're going to undershoot on revenue collection, taking up that borrowing figure to 10 billion. And the majority of the economists out there think that this really is a little bit hocus pocus and magical thinking. So that's the perspective that's coming out of there. In terms of ABSA, that's a $550 million restructuring of loans, so pretty substantial. And my concern, Bison, is actually this is going to get worse before it gets better. Because, you know, whether it's Nigeria, Kenya, South Africa, we're at an unprecedented hard stop in our economy. And I just don't see how a lot of these companies are going to be able to pay those loans. And I think that's a phenomenon we're going to see across. And if I can just quickly wrap up with, since it's Monday, with an overall view, looking at the markets Friday and into today, we're seeing a pretty steep sell-off. Whether it's in the equity markets, whether it's in the commodity markets. And I, for one, think that, you know, this COVID-19 is a circuit breaker. They pumped the patient full of cheap money. But over the last 48 hours, I think the markets have realized you can keep pumping. But if the patient is basically comatose, it's not going to help. And I think that is important for all of us to know. Frontier markets are meant to be divorced from emerging and developed markets, but clearly we're not. So I'm expecting a pullback across the African continent reacting to this. Yeah.
Yes, interesting. Over the weekend, Ali rightly said, this morning markets are in negative territory across the board. Uchenna, Minis at the Blue FX, the South African rand is on the back footing against the US dollar, against the euro, and against the pound this morning. British Petroleum coming in with a revision of his oil price outlook to $55 a barrel over a long time, taking some write-downs, about 17.5 billion US dollars. The risk off is back. Uchenna, how much of this negative or sentiments that we saw over the weekend validated your position last Friday as to where the global marketplace is heading?
Yeah, thank you, Wilson. It's basically what we're starting to see, what I've sort of highlighted, should I say, weeks or months back, saying that cheap liquidity, free money really is not the answer. As Ali has rightly said, if the patient is actually comatose, there is really so much you can do if you're not going to be dealing with the underlying structural issues. What the world is facing right now with COVID-19 is both a supply shock and a demand shock at the same time. So when you think about the first response is to print money, it's saying that, well, you didn't really get any really lesson from the last global financial crisis. Cheap money is not always the answer. It can help in the short term, but it's really not the answer. And that's what we are getting to see now. Now, what we are also going to be facing, which Ali has pointed out with Frontier on the margin market, is the rise of the US dollar. The US dollar right now is going to be playing a sort of, should I say, reverse safe haven asset, as the world will still be concerning itself with the US and the rest of the world gold differential. So you still have capital inflow into the US space, and a highly appreciating US dollar at this point in time is really, really bad for both Frontier and emerging markets.
Interesting times that we live in. As we get to the first half of the year, but just let me get Luke Ofojebe, who is the team lead in charge of equity at Vertiva Capital Management. Luke, good morning. It's good to have you on the program. Hope you had a very great weekend.
Thank you, Boatin. It's nice to be here.
Thank you so much. Now, if you look at the Nigerian market, quick one there, some news reports today that Nigeria's Business Day reports Nigeria's FX demand is about $7 billion US in arrears. We just spoke to some top officials of the Central Bank of Nigeria within the last hour, and what we got from the Central Bank of Nigeria that this story was not true, and that the total outstanding portfolio investors' money in the market was between $800 million and $1 billion US. The central bank sources also say that there are no new letters of credit or bills of collection being opened by Nigerian banks because of the lack of the full reopening of economies and in Europe and elsewhere. So, but that the central bank will continue to intervene. Right now, the central bank is not in the I&E window, which is the investors and exporters window, but will continue intervention in due course. But meantime, back to some of the stories we're coming through with last week was the DMO, Nigeria's Debt Management Office, at the third Sukuk, sovereign Sukuk attracts nearly 670 billion naira. That was the big story on the fixed income side. Meantime, the rest of the West Africa, the BRVM raised bonds worth 1.057 billion CFA, and then the BRVM listed Aura Bank Group will hold its annual meetings later this month in Lomé, the capital of Togo. This morning, early today, the Securities and Exchange Commission in Ghana says it has revised its earlier sanctions on 3 market participants. The 3 organizations which are involved include the Monarch Capital, whose license has been revoked. The SEC in Ghana says that license has been restored. The second firm, Integrity Fund Management, has its revocation of license commuted to 6 months suspension. The same for Legacy Fund Management. But let's get Luke to give us a very quick rundown of the Nigerian marketplace and what's your outlook for the current week.
So I will just speak to the first part of your question, really, and that's about FX. So, I mean, the reality is that foreign investors right now are not really interested in our market. Even from late last year, they've been showing that signal that they are not interested in our market. And COVID-19 actually worsened the situation for them. As a matter of fact, right now, a number of them are actually yet to get FX access. They want to leave the market, but due to limited FX supply, they've not been able to do that. I understand that CBN has already started this orderly exit for a number of them. So it's more like first come, first served basis. So they're actually on a queue to actually leave the market. So do we think they might be coming back anytime soon? I don't think so. Because when you look at the outlook for the oil market, it's not really that great. I mean, yeah, Getiva, we expect that average Brent price, which is the benchmark for Nigerian crude, is going to come in at about $40 to $43 per barrel, and that's still way less than the average of $64 we saw last year. So there you see that fear from foreign investors that we might see another devaluation. However, for Getiva, we don't think we'll be seeing another devaluation going forward, because really the CBN has actually been very strategic in terms of its management of FX liquidity. So we do not think we'll see a devaluation, but that's not how the foreign investors perceive us, unfortunately. The way they see it, looking at the spread between what we have at the NAFEX window and at the parallel market, that's about 67 naira spread, and that's about 16% of the NAFEX rate. So if investors are going to be taking in about 12% from the OMO market, and when it's time for them to leave, there is already a devaluation of about 16%. It actually doesn't make sense for them to be in the market. So that's why a number of them are actually leaving, and we don't think they will be coming back anytime soon. So that's
okay, so if you look at, look very quickly, let me just permit me to interject. So when we saw the stock exchange report, when we saw the report earlier from the Bureau of Statistics a few weeks ago, that foreign portfolio investment was still the bigger size, the chunk size, 73% was what we saw according to MBS in terms of portfolio investment against FDI. You folks still believe that foreign investors are leaving the Nigerian market, even with that size?
Yes, they are. They are actually. It's clear to everyone, even on the Bloomberg terminals, you will see here that a number of them are actually frustrated that they want to leave and they've not been able to do that due to limited FX supply. So that has really hurted their trading sentiments. We don't think they'll be showing interest in our markets for some time. So, I mean, if you're trying to look at the participation, foreign investors' participation in our markets, both equity and fixed income, has always been higher than that of domestic. So if you are trying to look at the absolute values, I mean, they should still be higher, but the expectation is that their participation in the market will be declining going forward because they're actually leaving the market. But trying to address their concern about like a possible devaluation, we don't see that coming in play. I mean, we started seeing like improvements in oil prices, although it will take a while before we see oil prices getting to pre-COVID-19 levels. But these improvements actually should support foreign reserves. And let's not forget that the government just got a loan from the IMF, and they are actually planning to get another concessionary loan from the World Bank. So that should also support our foreign reserves for some time while we continue to see improvements in oil prices. For the equity market, it's clear that it's a no-go area for foreign investors right now. So what will be driving the equity market going forward will be mainly domestic participation. I mean, for some time now, we've been seeing like a rally in the equity market up until Friday where we saw profit taking. And we think we'll continue to see that trend because the domestic investors we have, that's institutional investors, I mean, like pension fund administrators, they will continue to show interest in this market given that a number of stocks actually trading at very attractive levels. So we see them still investing in these stocks, and that can actually support our domestic markets going forward. Then in terms of government spending, as you mentioned in the latter part of your question, I think is the base expectation really. The country is already heading towards a recession. I think the only way out is actually for the government to spend the country out of recession. I mean, we have concerns over rising debt levels, but it's rather unfortunate that the government doesn't really have a diversified streams of income. We are still heavily dependent on crude, and given what we are seeing in the oil markets right now, not a good one for Nigeria. And looking at economic activity in the country, it's also at very low levels. So what it means is that tax receipts for the government is also going to decline. So the government just needs to borrow to finance the budget. And that's what we are seeing in a number of countries. It's not just Nigeria. This is a global situation. All countries all over the world, all governments all over the world are actually spending big to actually stave off a looming recession. So yes, we think that's what we'll continue to see.
It's time for big money. At the last count, by some estimates, about $15 trillion is already on the street for the COVID-19 pandemic. That's historic. So let's talk about the second largest. Thank you, Luke. Let's talk about Africa's second largest economy and the most advanced economy, South Africa. The rand started today on the back footing against the US dollar, against the pound and the euro. So what's the big story from the JSE? Let's get Ali to talk to us a little bit on this. Ali, what's your big take on South Africa as we start the new market week?
So we saw some quite dramatic GDP downgrades. Expectation had been around -5%, -5.5%. Now we're seeing -7.1% out of Fitch. On top of that, Boason, layer on that South African assets are so sensitive to global risk-on, risk-off sentiment. And we're essentially now in a risk-off moment that started on Thursday, Friday, and has spilled over. And basically the rand has been sold off. The lowest we hit in the rand this year was above 19. I can frankly see us going to 20 at some point this year if sentiment really starts to sour. The Johannesburg Stock Exchange, some insulation, but really it's going to follow whatever the Dow is doing, I'm afraid, notwithstanding that there are a lot of precious metals, gold exposure in there, so that will be supported. But overall, I think we're going to see a further slide. And just to talk briefly, the test positivity rate of COVID in South Africa is in double digits. And what that means is they are now at the highest rate of any testing on the continent is actually South Africa. So what we've got is a breakout of COVID. It started in Western Cape, as we know. So the markets are also now beginning to worry. If you're worried about a second wave, then you've got to worry about what's happening in South Africa and the intensity of the COVID outbreak there. So I think it's a perfect storm of things which is hitting that market.
Okay, we took a look at, Ali, just give us about 1 minute on Zimbabwe. We saw the earnings from Unifreight, one of the listed companies, and a very long 5-page adverse audit opinion by EY on this company because of the currency exchange rates story for Zimbabwe. If you bring that up, the auditors, the EY says, look, they do not agree with the exchange rate that the company Unifreight used to calculate its operations last year. That was a big story, long explanations about these. So how much of this, the currency messy situation in Zimbabwe will be affecting the companies that are listed on the Zimbabwe Stock Exchange, Ali?
Well, just to give people some flavor as to what's happening in Zimbabwe's currency, we're talking about as precipitous a fall in the value of the currency as we've seen in the most extreme situations anywhere in the world. An example might be Venezuela. And it's been a free fall. Each time I've looked at it, I thought it can't fall any further. In the last 3 to 4 weeks, it's exponential. And essentially, I think, Boasson, we're reaching a tipping point moment. And the currency market is the purest signal. I remember President Kagame saying that the market emits the purest signal. The currency market in Zimbabwe is telling you that the situation is now spiraling out of control. So therefore, you know, if you're going to look at what we're seeing from the company Unifreight that you just mentioned is a symptom of a disease. Either these companies are going to be straightforward and tell us how bad it is, because massaging such an exponential breakdown in the value of a currency is impossible. You can't do it because it's so extreme. So I'm extremely concerned about the situation there. Last week we had rumors of a coup. You know what it's like in Africa. When rumors of a coup start, then normally the coup is not that far off. I know in Zimbabwe it's been going on for a while, but really, you know, from a financial point of view, it's a very extreme situation. The final point is, interestingly, the Zimbabwean stock market has performed quite well if you just look at it without factoring in the currency. Like Venezuela, people keep popping up on Twitter and say, look at it, it's up like 400%, but it isn't when you try and convert your money. But it has been a flight to safety for a lot of people because there have been some stocks which are dual listed there and in London, and you've been basically able to shelter the value of your money because of that dual listing. But I think they've tried to undercut that.
Very interesting scenario. You're not even sure which currency is in play in Zimbabwe right now. Is the Zimbabwean dollar, is the US dollar RTGS, whatever it is. I'm sure the companies doing business that are caught in this kind of mess and their financials are in a very deep mess because you're not sure which currency you should use to make your calculations or your exchange rate for your operations and what have you. Then at the end of the day, you're flouting IFRS or IAS, whatever it is, international accounting standards. That is a big mess there in that Southern African economy. Thank you very much, Ali. We're going to wrap up now in about 30 seconds. Luke, give us your outlook on this week trading. Is there any corporate news you're looking out for on the Nigerian market on the equity side?
Okay, so this week, I think we'll be seeing more of mixed trading, but overall, I expect the market to actually close positive because last week, Friday, we saw investors really taking profits in a number of stocks. What we saw on Friday was not due to a possible fear that we'll be seeing a second wave of pandemic. That was what we saw in the US and the European market. But here in Nigeria, it was different. It was just investors taking profits in a number of stocks that have rallied for some period of time. So this week, we think we might see the investors coming back to cherry pick on a number of stocks, especially the banking and consumer goods. For the industrial goods, I don't think investors are actually showing interest in those stocks right now because really CapEx spend is going to suffer this year. So we don't really see growth in industrial goods companies. So we think we'll be seeing a number of investors showing interest in the consumer and banking stocks today. And that will support the market weekly.
Thank you so much, Luke. We appreciate that. If the foreign investors are not here, let the local investors take the front seat. We can have an empty driver's seat. Hold on a second. If the foreign investors are not in the driver's seat, let them get on the passenger seat. Then let the local investors take charge of their market. Ali, I'm sure you agree.
Yes, absolutely. I think this is always an opportunity for local investors to pick up good, cheap assets when the foreigners are not around. So take it, be positive, but I think you've got to be very, very cautious. Pick your spots and go for strong balance sheet companies because I think you've got to really forecast that this thing is going to continue longer than anyone expects.
Okay, take care of your own market. Charity begins at home. Put the local money at home and make it work at home. That's all we're talking about for Frontier Africa markets. Thank you so much, Ali. Uchenna, I'm sure you're watching the global markets, one eye permanently peeled on the global space. What's your reading? How do you think we'll finish off the week? Let's have your look at the crystal ball.
Well, I don't see anything quite positive happening in the market. Looking at
not even Jerome Powell's testimony this week.
You see, I think another thing about Jerome Powell, I think what he would have learned from the last FOMC statement is that he really needs to really be assertive with his wordings, because I think the market could read the undertone highlighting that there are no plans to have any positive V-shaped recovery as everybody has.
Some folks in Washington don't like. Some folks in Washington don't seem to like Jerome Powell's pessimistic view of the economy. Someone like Stephen Mnuchin, the Secretary of the Treasury,
the president also, if they had their way, they would have had Jerome Powell gone since last year. But it's clear now that, as Ali has mentioned, it's not going to be that easy. It's no longer a short-term, immediate thing now. We need to get used to this risk and see how we can sustainably and viably circumvent it. That's basically what that would be. The Japanese yen has been showing that we are in a serious risk-off mode. If that continues, we expect further downturn in the market.
Thank you. Turbulence. Everyone, fasten your seatbelts. Let's get back on the show tomorrow morning, bright and early. Thank you, Ali, in Nairobi, Uchenna, and Luke. Thank you so much for being part of the program, starting off the new current week on Frontier of Nibel. Thank you, everyone. I am Bosin Namafaya, and I'll see you again tomorrow. Bye for now.